Hi everyone, this is Jeff Clark of the Pater Prospector and the another edition of the Pater Podcast. We have an exciting interview for you today. It's a company whose stock has gone 10x for us since we first recommended it. So if you bought it when we first talked about it, you were up 1000%. And here's the thing, you're going to find out in today's video why this stock is still a buy. There is so much coming online. That's why we're doing this video, because there's so much still ahead for this company. This stock is a hold for us till 2030, and you're going to find out why. So please welcome Stephen Soock. He is the Vice President of IR and Corporate Development for Heliostar Metals. Stephen, thanks for joining us.
Thanks for having me, Jeff.
Great. Well, there's a lot going on for the company, but why don't we start first by you kind of outlining or summarizing what 2025 was like for Heliostar Metals and everything that you accomplished, because that sets the stage for what's ahead here in 2026.
Yeah, absolutely. 2025 was without a doubt a transformational year for the company. I recall we picked up the assets from Argonaut Gold, their Mexican portfolio, in two transactions, with the bulk of it coming in November of 2024. Kind of got our hands around them over the first couple of months and was able to recognize a lot of opportunities that were left behind. Frankly, because Argonaut kept looking to the next project and the next project and never thought to look for what was left in their own backyard. Once we started digging around, we found all sorts of treasure, and no pun intended. So really, what started off the year for us was the ability to start mining the stockpiles at La Colorada. This was a mine that was going into care and maintenance, and we quickly found the opportunity to put a 6.5 year mine life on the books, and that started with stockpile mining. This was material that was mined as waste in the 1990s, drilled, blasted, and hauled to surface, but graded zero point 0.2 grams a ton. So about half your costs were already incurred. And in today's gold price environment, or even the gold price environment in January earlier this year, we saw the opportunity to make some very good money, digging that stockpile up, putting it through the crusher, onto the leach pad, and making gold at the back end. So we put that into production starting in January, and we've been producing from those historic stockpiles, we refer to them, over the last 12 months, and continue to do that for the next couple of months going into 2026. So that was, call it the first piece that we managed to put back into production there. Then we said, what else is around here still in the ground that hasn't been taken up? And that's where we started to do some drilling around the edges of the open pit at La Colorada and found some extensions to the Creston open pit in particular, as well as our Veta Madre open pit, two again past producing pits on the La Colorada property. So once we started doing that, we realized again the pits were not constrained by geology; they were constrained by data. Once you can generate more data with the drill bit along
Uh,
trend, we saw the opportunity to put more resources around them, and that's exactly what we did in two separate tech reports. So we put out one in January, kind of just putting our stamp on the historic reserves that Argonaut had done, and then another in Q3 that incorporated the work that we'd done to be able to expand that reserve base based on that drilling, as well as doing kind of a more robust geotechnical study and really everything that we wanted to do as a conservative technical group to put them back into production. So that was, the kind of identified what the next phase for us will be at La Colorada, and continue to see lots of potential there. And we can go into that more detail on what we see ahead at La Colorada. But in 2025, it was really, a key restart asset for us. Then at San Augustine, this was another asset in Durango that was in residual leaching. So all of the ore that had previously been stacked on the pad, we continued to irrigate that, and the team did a really great job getting creative there. They did things like re-leaching side slopes of the pad that had never been properly leached, looking at re-leaching higher grade portions of ore that had been stacked on the pad and getting some good gold extraction there. And really kind of finding a way to squeeze the pad, as it were, to keep producing gold without any new ore being added to it. That actually outperformed its full year residual leaching guidance as of the end of Q3. So they did a great job there. So that's been an outperformer for us continually. But really, the
yeah.
goal here was to put that back into primary production. We knew there was a reserve that shows, that 45,000 ounces of gold can be produced. However, we need to get the permit to be able to do that. we've been going through that permitting process since pretty much the day we acquired the assets. And then in July, we were the first new open pit mining permit issued under the Sheinbaum administration in Mexico, which was
Yeah,
something
that was big news at the time. Yeah.
exactly. Yeah, our stock responded to it, as did all other Mexican permitting stories. So, it tells you
Yeah.
just how big it is when your news affects the whole group. So that was wonderful. Since that time, we've continued to work towards all the pieces that need to be put into place to put that into production. It's not like you get a permit, snap your fingers, and start producing gold. There's a bunch of documentation, other bureaucracy that you have to go through, land transfer, etc. We've gone through that process, and then just announced that we've started stacking ore from putting that back into production. So this was a great short-term tactical opportunity for us, and certainly a lot of work's gone into it over the last primarily 6 months, and then before that with permitting, but only a little bit of money. The tech report we issued showed that initial capex of only $4.2 million US. So for a very little upfront investment, we're able to generate significant cash flow over the life of that asset going forward. And then, the idea remains consistent here. We saw the ability to generate cash from La Colorada and San Augustine to be able to fund the eventual development of Ana Paula. And work at Ana
Yeah.
Paula has gone on steadily. As you know, that's the crown jewel of our portfolio,
Yeah.
and really something of unique quality level. So we've, initiated a 15,000-meter drill program focused on infill and upgrade drilling. We put out the first ever economics for the underground deposit there. Recall this was an old open pit and permitted as an old open pit project with not great economics and a complicated project structure. We completely reimagined that, displayed to the market why we saw the opportunity there. So some highlights from that were for just 300 million initial capex, we can produce 100,000 ounces a year, just around a $1,000 all-in sustaining cost. So it really is a unique beast in its cash flowing ability once we're able to put it in production. So the drill program is going into de-risking that, upgrading those inferred ounces that are included in the PEA, as well as targeting some near some deposits of mineralization that are near planned underground mine infrastructure. So, we're working as fast as we can to try and get that up and running, because we're really excited about what that'll mean for the cash flow
Yeah, I
profile of the company.
remember when I wrote up the company, Stephen, that I said, "Hey, this stock is a 10 bagger based on Ana Paula alone." And here we are. It's already a 10 bagger, and Ana Paula is, not in production yet. So that kind of highlights the opportunity still ahead. But go ahead, finish out 2025 for us.
Yeah, so we continue to work. We expanded that drill program at Ana Paula from 15 to 20,000 meters based on the success we're having there. And then just to cap off the year in terms of our studies, we put out a pre-feasibility study for a Cerro de Gallo project as well. This is another open pit heap leach project that can produce about 85,000 gold equivalent ounces on average over a 15-year mine life that I think the market kind of forgot we owned. We hadn't really put it front and center because we've been quietly working on kind of redoing this pre-feasibility study, and that significantly added to our M&I resource base, as well as our reserve base. So and that really the key part there was that finishes how we're able to show to the market how we get from our 30 to 40,000 ounces produced this year up to that 300,000 ounce a year mark by the end of 2030, which is the time horizon you mentioned in your introduction.
Yeah, yeah, exactly. So very exciting. And how much cash has the company going to end 2025 with? We're talking here just before Christmas, so about how much cash is in the till there, Stephen?
Yeah, good question. We finished Q3, our fiscal Q2, but what we're calling our Q3, September 30th, with $35 million in US in
Mhm.
cash in the bank. We've drawn down on that a little bit as we've spent money to put San Augustine back into production. And imagine as the gold price continues to move up and to the right, it's blown way past our internal projections in terms of cash flow.
Yeah,
So
that's
our
great.
cushion's actually much more comfortable than we thought it even would be when we were doing our budget, our mid-year budget. So I don't know a final number yet, but it's it'll be it'll be well north of $20 million that we'll finish the year with.
Yeah.
And then we put San Augustine back into production, and we'll start to see that cash balance ramp back up very quickly.
Right. So
But
you're going to have lots of cash flow going ahead. Stephen, can I ask you, will that cash flow fund all the plans you have on all your projects for 2026? In other words, will there be a raise or is the cash flow going to do the trick for you?
Yeah, it will. The short answer is we are well funded out of our producing cash flow to
That's
fund
great.
at all the times everything that we need to do. It was funny. We had a discussion with someone else a little while ago. Said if $50 million were to magically drop out of the air on you, what would you change in your business? And our CEO Charles and myself kind of looked at each other and said, "Well, there's not really anything. We're kind of doing everything we can at the maximum pace." That we're comfortable with technically, that we have the ability to handle as a group right now, it really wouldn't make a difference. So that just tells you that the cash generating capacity is kind of matched with the growth of the company right now.
Yeah, that's great. That's fantastic. So, okay, let's shift gears and talk about what's ahead, especially here in 2026. Any number of these things could be catalysts for you that are investors or considering an investment in Heliostar. Again, it's my opinion, but I do not think it's too late to buy this stock because of all the things that are ahead, which we'll talk about. But Stephen, let's start. You just had some news out. Why don't you walk us through briefly that news?
Yeah, so the big news for us recently was we announced the restart of production at our San Augustine mine. So you'll see pictures of ore being stacked on the leach pad. So that's major for us that we'll be able to show that asset coming into production and really driving the cash flow through 2026. That's
And
an
that'll be the
incredible feat
third
for us.
producing asset for Heliostar. Do I have that correct?
That's Sorry, that'll be our call it second producing asset. We've been producing from residual leaching there, but now we're putting it
Right. I
back into
gotcha.
primary production.
Gotcha.
Now, the other piece of news we had recently was the government kind of outed us on a permit that we'd applied for and effectively gotten. There's a little bit of nuance to it, but now that we know we have certainty in the cash flow from San Augustine, the fact that we've all but gotten the Veta Madre permit, which is an additional open pit cutback at La Colorada, we know we'll be able to comfortably fund the development of that additional ore source. So again, all the pieces are kind of falling into place here, matching cash flow with production growth, and being able to fund the opportunities that we saw when we picked up these assets.
Do you have a sense for what St. Augustine is going to be producing in 2026? Or I assume there's going to be some growth there.
We haven't yet provided guidance.
Okay.
So, the tech report showed production of 45,000 ounces over a 14-month mine life. Again, there's going to be a bit of a ramp up as kind of the production ramps up in Q1. So, yeah, I think it's fair to say, call it around 30,000 ounces if you can do that math and add some conservatism into it. So I think that's a good, overall benchmark to use for San Augustine. And the tech report also showed a life of mine all-in sustaining cost of just shy of $2,000 an ounce. Now, a lot of that is actually front-end loaded. The first couple ounces are the most expensive just from an accounting standpoint by
Yeah.
putting it back into production. So, we've been saying we see it producing, again, without providing any specific numbers, around $1,800 an ounce all-in sustaining cost. So it'll provide some very significant cash flow over this year. And then, beyond, we think there's good opportunities to extend that mine life with the exploration drill bit well beyond the 14 months.
And that's my next question. You are going to still be drilling there in
That's right. We
2026.
currently are drilling there. We've got a 10 to 15,000 meter drill program ongoing, focused on expanding oxide gold mineralization beyond that initial reserve. We see excellent opportunity to extend the corner area where we have been mining further within an area that could be easily permitted based on what we already have in hand from the government, as well as other opportunities around the larger existing open pit that either weren't rigorously explored or are now interesting in terms of a short-term opportunity to monetize at $4,000 plus gold. So, 14 months on the books, we think we'll probably be mining there for, let's say, 2 to 3 years as these additional resource expansion opportunities come to fruition.
Yeah, great. That's great to hear. Okay, now tell us about La Colorada because production, exploration, give us an update of what we can expect in 2026 from that asset.
So right now, what we're looking at is putting Veda Madre back into production. We're going to start that in Q1. It'd be 6 to 8 months of waste stripping, and we'll start to see kind of an uptick in production at La Colorada. Beyond that, again, we see multiple resource expansion opportunities here that we're just starting to kind of fully tackle. There's an opportunity we call Veda Madre Plus. That's a pod of about 30,000 ounces in the indicated category that didn't make it into the reserve when we did the mine
Ah,
plan for Veda Madre. Mostly just for the sake of conservatism. That pod of mineralization is really driven by two high-grade drill holes and a few other holes, but we wanted to come back and do another 5 to 6 hole program to really confirm it's there before we commit to any additional expansion of that pit. That drill program is almost complete. We should see assays there in Q1 that again will hopefully show us that we were able to expand that opportunity even further. Beyond that, then there's a whole regional exploration package beyond the mine trend at La Colorada that's never really been rigorously explored. For example,
ah,
there's a 2 kilometer long golden soils anomaly in the southwest of the property with grades that are above that of the cutoff grade of the open pit that's never seen a drill hole. So you can imagine our geos are
ah.
itching to try and tackle some of those, work up some drill ready targets. There's a little bit of work to be done, but there's certainly some low hanging fruit like that and multiple other opportunities, past producing small open pits that have never been followed up, alteration showings on surface that have never been walked. So we think, we'll be mining at La Colorada for more than 10 years once we start to be able to
Wow.
follow up on all these other potential
So
opportunities on
you
the
have
property.
production, development, and exploration all just at La Colorada.
A little bit of something for everybody.
Yeah, that's amazing. That's just one asset. That's fantastic. And then let's talk about like you called it and like I call it the crown jewel Ana Paula. So you've got a couple things going on there, but just outline for us, Stephen, what's ahead in 2026 at the crown jewel for Heliostar Metals Ana Paula.
So the work never stops at Ana Paula, I can tell you that. We've got that 20,000 meter drill program that'll extend into Q1, and assays obviously as to be reported thereafter as those come in as they go through the process. And then the major milestone in 2026 for Ana Paula will be the restart of the decline. So a previous operator, Alio Gold, put in a 400-meter long decline towards the ore body and weren't able to complete it before they were bought out for a different project. We intend, now that we again have the certainty of that cash flow from San Augustine, to spend the money to continue to advance that into the deposit, and that'll let us do two things. That'll let us de-risk the Ana Paula project area, as we'll kind of call it. Be able to get the geos in there, have them map the rock kind of up close and personal, see how the rock mechanics all work and stand up, and really do potentially do some test mining, all the things you want to do before you kind of launch into full scale production. The second thing it'll let us do is establish an underground drill platform to continue to
Uh,
drill the down plunge extensions of Ana Paula. For those who don't follow the story very closely, but like Ana Paula is the distal upper expression of the geologic column. And then we know that the high grade fluids, you can trace them down at depth. They get into tighter structures, but we know based on the geologic model that somewhere down there has to be a very large causative intrusion and contact scarring. We know that because that's
uh,
what Torex is mining at their Media Luna deposit just a few kilometers away. That's what Los Filos is mining in the district. So that's how
mm.
these deposits form. We know one has to be down there somewhere, and we really want to start doing the work to try and tackle that. If we find that could be a multi-million ounce potential beyond the round number million ounces that we already have in the very profitable
Yeah,
Ana
wow.
Paula
That so
project.
Ana Paula could grow tremendously still, as
That's
rich
what
as
we
it
think.
already is.
Yeah, that's what we think, and we're going to start doing that work probably near the end of 2026, and then start to
Okay.
see assays thereafter. It's a single face decline advance, so it does take about 6 to 8 months to be able to complete that work before we're able to start drilling and then assay turnaround time. But that's certainly a key objective for us to be able to get to and start to talk about as the next part of the story.
Yeah, that Anapollo is going to be printing cash when that thing eventually goes into production. So, which is 2 to 3 years away yet, right?
Yeah, I mean it's coming up here. We're advancing at a pace. The technical work in the background to support a full feasibility study is something that we don't you won't hear about every month necessarily. I think we'll do kind of a mid-year update on all that technical study work
Oh, okay.
ongoing. The idea is that we want to have a full feasibility study ready to present to the market in Q1 2027. Pull the trigger on construction shortly thereafter, 18-month build timeline, and be ramping up to that 100,000 ounces a year production rate in the second half of 2028. So it's really not as far away as
Uh,
as it looks.
gotcha. Very good. Stephen, what asset are we missing? What did we not talk about? Do you want to talk about the exploration projects at all? I know Unga isn't getting a lot of attention right now for good reason. You have all these other rich assets that you can develop and start production, but any other
It's worth
asset you want to talk about that's coming up in 2026?
I mean, when given the opportunity, I always like to throw in a mention of Unga because it still is a great project. It's one
Uh,
that's become a little bit orphaned in our portfolio. That being said, we have done a small exploration program there. We've refreshed our community commitments. We did a small drill program. So, work hasn't stopped completely, and it
oh,
really is a project that deserves a good home. We're still deciding if that's within Heliostar and forcing it to compete with capital inside the company, or is that something we look at doing some sort of JV structure on, or selling outright and keeping some exposure. As you can tell, it's not a driver for the company right now, but we still really like the project. We think there's easy runway to 1 million high grade ounces at Tidewater, plus multiple upside potential from there. So we haven't forgotten about it. I think the market probably has, and like you said, for good reason. But we still like it, and we still continue to pick away at it where we're able.
right. Gotcha. Very good. Okay, Stephen, so take us from where we are now with Heliostar Metals in terms of your production, your output. Where will we be at this time next year if you and I have another video in December 2026?
Yeah, so I think next year we'll have San Augustine online. We'll likely have Veta Madre online. So we'll have two open pit mining assets, which will be really exciting for the growth and development of the company as a whole. I will probably looking at production running around 50,000 plus ounces a year. Again, without providing anything specific, you can add up our tech report numbers and kind of get there. We'll be looking at talking very much about starting to build Ana Paula in 12 months' time. I think that'll be very much front of mind for us and everyone else. And then, I think from there, we'll be talking about where we'll be a year from there. And I think that's really where the inflection point of the company it truly is. At that point, we'll be producing 150 to 200,000 ounces corporately at a corporate all-in sustaining cost, probably less than $1,500 an ounce, driven by the low cost structure of Ana Paula.
Wow.
If we're able to do that, all of our peer comparisons, who would be peers at that point, are trading at $2 to $3 market cap valuations. So that's where we think we can get to quite easily without cherry picking
And where are
anything
you
down.
at today?
We're around 700 million right now. So the magic of Heliostar is we'll be able to show that, call it 3 to 5x from
Yeah.
here on our current share count. We're developer growth re-rate trajectory without the implied equity dilution you usually get with a development project. And I think that's really a rarity in the industry and why Heliostar is something special. And certainly part of the reason I joined earlier this year as well.
Yeah, great. Well, you came in at a pretty good time, I think. But I mean, I've been following Charles Funk since way back, and I'm a fan. He's done very well, and you guys are handling everything, multiple things, just as well as these things can be handled. So I'm really proud to be a shareholder, quite frankly, of Heliostar Metals. So I think it's done
I
very
appreciate
well, and
that.
I think it's got a lot more, ways to go. So, Stephen, before we wrap up, is there anything else you want to share with investors or potential investors that might be looking at buying this stock?
I think just to kind of echo what you said, Jeff, that we've had a great re-rate through this year as we've gone from a trust me story to having a true development plan and being able to show that with technical
Hmm.
studies. But if anything, our growth trajectory has gotten even better. Now you can see on paper what we're going to do, how we're going to execute, how we're going to get there, and continue to grow and 10x our production by the end of the decade. I think that's really, if I had to sum it down into one point. It's tough to find many other opportunities in the sector where you can look at a 10x production that's fully funded from an equity standpoint.
Yeah, that's fantastic. So there you have it, ladies and gentlemen. It looks, it sounds like to me the 3 to 5x is not out of the question over the next 2 years in the stock. Maybe another 10x by 2030. Uh, just tremendous growth coming from multiple assets from the company, led by an excellent management team. So that's why I think you want to hold on to the stock if you own it, or if you're looking for more shares, obviously buy on a dip. But this is a good summary of why we like Heliostar Metals. So, Stephen, thanks very much for joining me.
Perfect. Pleasure to be here. Thanks for having me and happy holidays.
Happy holidays to everyone, and thanks for joining us here on the Pay Dirt Podcast.